Hey everybody, how we doing? Welcome to Ready Set Live. It is January 16th, 2020, and yeah, we're here to talk about what's going on in the markets, what's got us excited, what we're looking at, and yeah, so let's start off as we usually do by asking where you guys are coming in from, what's going on in your part of the world, and let's get the stream going.
Hey everybody, Doc here from Greenville, South Carolina. Welcome aboard. Glad to see everybody out there today. We have Dennis G. Yo yo yo. We have Robert from California, deep behind enemy lines. There you go. Good job. Interesting week we have on tap here.
We do.
We finally started to see some movement off of the base. How's everybody doing? So what we'll do here is, hey Mav, do you have a little bit of PowerPoint for us today?
I might, yeah.
You might. Okay, we got Mike from Utah. We got Richard, Connecticut. We got Sticks, London, mate. Good day. We have John, San Diego. We have George from San Diego as well too. We got stay-at-home dad from Rhode Island. See, good. We got Dublin, Chicago, Pakistan, New Zealand, Sweden, Anaheim. Awesome. Everybody from all over the place. Good to see you guys. Glad you're joining us here today. Ready Set Crypto. So we'll do a couple of things here. First of all, why don't we do this? Mav, you okay with me taking the screen?
Yeah.
All right. I'm gonna do a little grab screenage here and walk you guys through what I'm seeing in the markets. First of all, the big news 3 days ago, we had a nice breakout from this pattern, and I think it caught a lot of people by surprise. So even though this is not a surprise that we transitioned into a daily uptrend, it was we've been in this pattern for 6 months, and it's not just a weekly bull flag. It's more than that. It's almost like another element of that bear market that we had. Really, what's driving my long-term thesis for the market though is on the log chart, the monthly log chart. This is still what I'm seeing here, and we actually got a decent little bounce off of that long time trend line. So that's the monthly log perspective. So if we keep drilling into that, if we move down to the weekly chart, what we can see is that, and again, this is where you have to be honest with yourself, right? You can't trade the market that you want. You have to trade the market that you have. And what we have is we still have, even though this is a little bit of a consolidation, we still have, this is still a lower high. So I'll just put LH there, lower high. And what we want, this is still a weekly downtrend, which is a nasty pattern. And so we've got to fix that. So to fix that weekly downtrend and turn it into an uptrend, one of two things has to happen. So either we're going to get a blast off of here, we're going to break through 10,400 to create a new higher high. Put a little HH there for higher high. That's one way to do it, because what that would do is that would increase the probability that any low from here is a higher low and start that process of moving it to a primary uptrend. The other way that we can see, and more than likely what I think we will see, is some type of intermediate low here, which is going to be a higher low. So far, this is the current lows down in this area. If we print a higher low and then break through that with a higher high, then we've done exactly the same thing, just at a slightly lower price. So that can all happen below 10,000. We can break loose from this line. But rule number 3 of my 4 fractal rules is that descending patterns break to the upside eventually. Eventually they do. Now, what's really interesting also about this is if we reverse this chart, if we invert it, we can see that Bitcoin is got a tendency. This looks like a normal market where bottoms are an event, tops are a process. Bottoms are an event, tops are a process. This is an inverted chart. But Bitcoin by itself and just about every other cryptocurrency does not operate in that manner. So what we're seeing is we're seeing tops being an event, and the bottoms being long, protracted affairs. And guess what? We're going through another one right now. Now, what's the difference there? Why is this acting like that versus any other market that we trade, which is typically something like equity markets? Well, the biggest difference is institutional support. When we have institutions, if we switch this over to something like the SPX, the S&P 500, you can see how bottoms are an event here. They don't last very long. It's like, pow, spike, and then up she goes. Big time movement today as well, too. Look at these bottoms here, so spiky. And this is because institutions are forced to be primarily long. They've got to be long. They've got to be invested into the market. And guess what? We haven't got to that point yet with Bitcoin or any other asset, right? So it's all very much speculative. So when we start to see more institutional assets coming into the space, and I think that we're starting to get that through the CME options and backed and things like that. Now, don't forget, guys, you can't trade those CME options yet. They have to be introduced through a broker like a TD Ameritrade or Schwab or an E-Trade or Interactive Brokers or somebody like that. So unless you're going to lease a seat on the CME, you can't get access to those options yet. So one of the things that we're seeing is, let's move over to this, the crypto derivatives market is, and this is a site from the blockcrypto.com, right? So what we're seeing is the futures markets are still being very heavy, right? So very healthy, very heavy. And you can see that's pretty well spread along between a lot of different vendors. A lot of people have come along and taken a big chunk out of BitMEX. I just don't think Arthur cares anymore. But when it comes to Bitcoin options, and trust me, guys, this is going to be the key towards institutional investment, is going to be these institutions being able to hedge off and risk manage their portfolios through the use of options. And once they're able to do that with liquidity, then this is going to make a huge difference. So Deribit is still taking the lion's share of the volume, and that's not good right now because Deribit is a company that's moving to Panama, doesn't want anything to do with the United States, and so we're not going to get that volume in there. In fact, I am being almost forced to close my Deribit account because they're going to go into KYC starting next month. So what do we have left? Ledger X, which is sitting out there saying, buy me, buy me, buy me. So what's going to happen more than likely is some big US firm is going to come along and swallow them up and grab that. So there's backed, there's CME, and you can see there's almost no volume on here. So this is going to be the big game changer. When we have institutions that come along and start to put real volume beneath this, this is when we're going to start to see these charts get real spiky bottoms and we're going to start to see big time accumulation. Maybe that is what has started. Now, let me talk about, let's see, let's go down to the daily chart. So let me finish off here by talking about this. There's a couple of different ways that this can move from here. So what I'd like to see it do, obviously, if it just keeps on going, it's going to collapse in a heap. So what I want to see it do is I want to see it continue this sort of stair-stepping mode. Stair-stepping mode like this, where it breaks out, consolidates for a short period of time, breaks out, consolidates. This is what's called quiet and trending character. This is very robust. This is very linear, very predictable. This is the type of price action that we want to see coming into this. We don't want to see everything coming in 2 days of accumulation and then it collapses in a heap like this. This is the type of price action that I do want to see where it just stair steps along. Now, if we don't get that, if we instead get something like this where it's more of the pullback variety, that's fine. If we get more of the sawtooth pullback variety, that's good as well too. That's just as good as the stair stepping mode. What I don't want to see is the price just kind of popping up here, collapsing back into the pattern. I do not want to see it back into the pattern. And also, if I've got a wish list that I can put down here, I want to see more volume. because what that's going to show is that there's going to be more bears back on their heels being forced to cover, which is going to help us drive the price. Okay, that's it from this end. I'm going to switch you back over to Mighty Mav. And let's see, where do we go here? I have just lost my. Can you grab the screen from me, please?
Yeah, here we go. So I'll sort of dovetail off of what Doc was just talking about, and talk a little bit more from a fundamental perspective as to what I see driving the markets, and particularly what I want to pay attention to this week. And primarily, I think the keywords, the buzzwords, are going to be around Bitcoin options and Bitcoin futures. So let's dig into that right now. So here's a timeline that I built for our Omnia newsletter, and it kind of gives you a sense of how just really exciting the Bitcoin options and futures space has. It's really catching fire in a very quick amount of time. We can see that since back launched in December, we've had OKX launch, we've had FTX launch. We just saw the CME launch their own Bitcoin options on futures contracts. We're seeing milestones like 20,000 BTC traded using Paradigm, which is partnered with Deribit. Deribit is fundraising 10% of its shares. Just lots of these really impressive milestones, really impressive marks of progress happening in a short amount of time. That is really legitimizing the space, really helping us to move forward in a very conducive way that helps us to, as Doc talked about, it's not just about institutionalization, but rather stabilization. Getting the market to have the sort of liquidity and volume that we want to see to help enable the growth of the space. So this is another thing, and also kind of Doc and I take from the same sources, but kind of gives you a sense that just in about a month, we've seen over $500 million in terms of aggregated open interest on BTC futures across the entire spectrum of exchanges offering those. And I reused the same chart that Doc did, but this also gives you kind of a sense of the aggregated daily volumes and how we're starting to see an uptrend in terms of that going into 2020. Another thing to recognize is just the importance of the CME Bitcoin options on futures contracts, and what it really represents in terms of this is a real foray into having institutional attention, not just capital or not just the sort of trading volume, but real market progress in terms of legitimization, the sort of tools and resources and just infrastructure that needs to be in place for this space to become more legitimate, for regulators to give it the fair shake that it deserves. This is all extremely positive, and it gets more institutional investors in the door as well. So that's something we definitely want to see more of. So I'm going to quickly run through just some of the differences between some of the major options exchanges right now, or exchanges offering options, and some of the things I want to pay attention to. So obviously the first one that most people know about is Backed. And right now it's not trading a whole lot in terms of 24-hour volumes. But importantly, these are institutional, trading volume. This is something that I think was really overblown, or the way it was reported in a lot of the major news outlets in the cryptocurrency space was that, oh, Backed is such a failure. The volumes are so low. There was all this hype, and now look, it's only got 47 BTC on average for 24-hour volumes. What a joke, right? Well, the thing is that 24/7 BTC is very institutionalized, legitimate volume being traded by institutions that, yes, while it is small now, it's a step in the right direction in terms of legitimizing the space, having true institutional volume, like participating in the space. And that can't be, you know, in my opinion, overstated. Uh, that's I think it's just baby steps that we have to take to get us to the bigger and better places that we all want to go. So yes, Backed is still very nascent, still sort of matriculating its way into becoming more and more of a powerhouse in terms of Bitcoin futures and Bitcoin options. But definitely, I don't want there to be, especially in 2020, as we see the options and futures markets start to heat up, there this sense of, oh, Backed is such a failure, Backed is such a disappointment, or any of that. No, it's helping to push the space forward. It's helping to get other institutions to recognize the potential of being participatory in the cryptocurrency digital asset space. So Bakkt has done a good job of getting attention driven to the space. Clearly, the second big one has been the CME group, and just in their first couple days of operation, they've just crushed it in terms of some of the volumes that we're seeing. Again, not as big as we would see if it was completely open to retail traders or completely open to the world. Right now, it's very much niche trading in terms of institutional. Um, but again, this is helping us to push the space forward, legitimize it, and leads to bigger and better things down the road. So, not to boil the ocean on this point, but definitely something that I think has been really just as we've seen over the past week or so, this has been sort of the catharsis moment right now where we're seeing the market start to recognize the potential of institutionalization, of institutional just infrastructure being in place, getting away from this unfortunate garbage that we see with things like Bitcoin, Satoshi Vision, and just absolute wash trading. 98% of its volume comes from these shadow dark exchanges. So it looks like it's making all these huge gains when it's just happening on these little tiny exchanges that no one's actually trading on, or they're basically just manipulating their price. And it's getting people to talk about it and blah, getting away from that sort of sense and getting to something that's more regulated, more fair to traders like you and I. I think that's something we would like to see more of. So that's where we kind of are with the CME right now. Another one to pay attention to is FTX, which is not as well known, but is certainly getting a lot more of this 24-hour volume because, like Deribit, it's a lot more open. But also, like Deribit, it does not serve U.S. clients. So just another one to pay attention to. Also interesting to note that it settles in physical Bitcoin. So just some diversity, some variety in terms of offerings out there. And finally, there's Deribit itself, which, as Doc mentioned, they are moving and in the process of transitioning, and in particular kicking out U.S. clients officially. And so, yes, it is unfortunate that they are having to go that direction, and hopefully in the future that there can be some sort of compromise or something of that sort. But I think they more represent the global markets right now, whereas Backed in the CME represent the U.S. FTX and Deribit kind of represent the larger market. So obviously we see the 24-hour volumes to be much higher in that regard. And also the initiatives that Deribit is putting forward, I think are very noteworthy. Their recent partnership with Paradigm, which is oh, I had an yeah, here we go. Which is it's meaning to replace cryptocurrency or over-the-counter trading being facilitated through Telegram. So there's a lot of interest in that, and there's a lot of as we can see, kind of the options volumes has been starting to really pick up in the past couple months. So very exciting for them to have hit 20,000 BTC volumes. So yeah, very, very exciting stuff. This is where we are right now, and clearly things can change. But I think the important takeaways here is that this leads to bigger and better things down the road. I would say after having seen some of just the facilities that are being employed right now by CME and Backed and some of the other institutional interests, some analysts out there are putting speculating that we'll see there's about a 60% chance that we'll see a Bitcoin ETF product this year. And I don't know. Oh my God, he's talking about a Bitcoin ETF. I'm gonna run away right now. Yeah, I'm right there with you guys. Like I never want to hear about a Bitcoin ETF, at least in terms of hype, ever again, because we clearly went through that in 2018. But what's important to note is that Bitcoin options, Bitcoin futures, institutionalization, even Bitcoin ETFs, these are stepping stones to getting broader acceptance, broader market participation, just legitimizing the space. We're not asking for a Wall Street hostile takeover. We're asking to be recognized for a legitimate, market that we are. And to do that, we need to have institutional buy-in. So it's yes, there's a great balancing act of, do we enable Wall Street at the same time that we enable the black markets and the the dark web and all this sort of stuff? That is the balancing act of cryptocurrency, and it's one of the most interesting, I guess, paradigm shifts of our time. But that's kind of the challenge and the opportunity. So it's definitely not something that's going to happen overnight. It's not something that's going to there's no ultimatums here. I think that's the other thing to keep in mind is that there will always be this sort of libertarian sense of what cryptocurrency is, and there will always be a space for that. But I think for this market to speak to the larger amount of people, I mean, there's only about 40 million blockchain wallets in existence right now. We're our market penetration is tiny right now overall, and that's been in the space of 10 years. So my interest is seeing this space grow up and get the sort of recognition and just acknowledgement that it deserves, because this technology, especially when combined with other fourth industrial revolution technologies like AI and IoT and 5G, it's transformative, it's revolutionary, and it's going to help uplift our society into this new decade, this new century, etc. So it's very important for me to see some of this get acknowledged and grow up. So, and I'm not alone in this. This is CFTC chairman. Uh, where is his name? Heath Tarbert. I keep forgetting that. I keep wanting to think of Giancarlo, crypto dad, who unfortunately was no longer the CFTC chairman. Heath took over back in April, so he's relatively new to the job, but already he's expressed his interest in legitimizing the digital asset space, adding liquidity to the markets, and it comes from, as he says, by bringing the world of the institutional world into sort of marrying that with regulated financial products as it relates to digital assets. So yeah, it's not. I'm not a fringe opinion here. If this is what the CFTC has a view of, I do believe that this sets the groundwork for the bigger and better things that I keep repeating ad nauseum. But like, there's importance here. There's legitimate reasons for doing so. So yeah, I think it's going to be a very exciting year in terms of the steps we take to uplift this space, how we see it, represent itself to the larger markets, how we act as a hedge against the global chaos and all that sort of stuff, and really just how the narrative of Bitcoin and cryptocurrency and blockchain starts to evolve. And so I think we've already started 2020 in a very interesting place between the the macro perspective and also the products that we're launching. So yes, I think it's very important for you guys to understand Bitcoin options and futures. And to that degree, we're having a quick little sale on two of the courses that we've previously put out regarding these topics, options trading, futures trading, which you can get to over at readysetcrypto.com/courses. You can see our full course catalog, but these two in particular, we're having a 25% sale on by using the coupon code 2020. So yeah, definitely something I would say is worthwhile picking up as a skill set in 2020, because it's quickly going to become more and more relevant to the larger discourse that we're having, and some of the ways that the market is evolving. So
The cool thing about these courses is they adapt to what's going on with the current space. So, for example, like we just did a trade school session on CoinFlex last Friday with Nico, one of our Omnia customers, and that's going to be turned into its own module here. So, funding an account through CoinFlex, when Digitex finally comes out with a production product, we'll have it, separate module for that. So it's going to grow with the market space. There's some like with futures and options, there's basics that you have to understand about the actual trades and how the instruments work and how you get edge in these. And then there's the whole other aspect of it, like, okay, well, how do you use it with the current vendors that are out there today? Because everyone is different. And so these are courses that will grow as the space does change.
yeah, yeah. So cool, guys. We'll shift into Q&A now. Oop, still figuring out this. All right. Streamlabs is an interesting program. All right. Cool.
So LP is asking me a question about normally, and this is something that I was pounding on and I've been talking about for the last couple of years. Oh, that looks really cool. I'm way over here. Hello, everybody. Um, where, and this is what I just brought up in the first section, is that normally we're used to seeing very big spikes and big high volume capitulation moves with most markets. Every market that I've ever traded for the last 20 years works like that. And there's just some maxims in trading that you follow regardless of what's happening. So like rule number 3, descending patterns break to the upside. Well, that still happens in cryptocurrency. But what I've noticed lately, and this is about the last 3 or 4 months, is that we're not seeing the same type of bottoming action when it comes to cryptocurrency. And I believe that a lot of that is due to the absence of institutional support right now. So we're not seeing them force the price down. We're not seeing people massively puke out of their positions and create the liquidity event that institutions need to accept and absorb their orders. And so that creates a whole different order book for how this plays around. And that's why I was inverting my chart before to show you what a normal market looks like in Bitcoin. In this case, is actually opposite of that, where the tops are very spiky. Those are the liquidity conditions where institutions can sell into that, but they don't have liquidity conditions that are conducive for them to accumulate in the size that they want to. So they have to go in and nibble away and just sort of like pick up positions, piecemeal, which is different from how they have to do it.
Yeah.
So yeah, this is something I've just noticed here in the last couple of months, is that this is different, and maybe this will change down the road when we get into a better a better environment for derivatives, which will encourage them to take more risk and add more position size.
Yeah. Yeah, and I think the other perspective on this is to go back to 2017 and sort of go through the hypothetical of what if there was institutionalization, which is such it gets thrown around as almost a dirty word, but like if there was more of this sense of regulation and just protections in place for retail investors, I don't think we would have seen the same sort of ICO scam circus that we saw. It's all well and good to have a space that embodies innovation and all of that sort of stuff, but to have just rampant just fraud in place, I think we have to recognize that as what it was. So yes, it's a balancing act of total freedom and total control. We want something somewhere in between to enable the sort of innovation that the space needs, while also trying to keep it as this sort of, I don't say Wild West, but certainly a space that imbues free thought and free principles, free markets. That's something that I hope we continue to have as central tenets of the space. And to pair that with institutional products and the regulations that legitimize the space in the proper ways. Um, yeah, it's a tough thing. That's why it doesn't get solved overnight. But yeah, the opportunity is that we get blockchain in more people's hands. To me, that's a worthwhile goal.
So why is palladium pumping? Does that have anything to do with battery? Anything to do with rechargeable batteries? I do not know.
Yeah, precious metals are getting a little bit more exposure in times of crisis hedge. We certainly saw gold break through a 6-year high, so that was definitely something. Yeah, I saw an article about that. Like this unknown metal is suddenly getting lots of trading exposure or something like that. Or, I don't know. So yeah, there's always going to be breakout opportunities. Less so for the precious metal markets, but they're there. Yeah, I would say it's probably related to it being a you know rare earth metal or something like that, and being used in electronics. But this is not my forte, so I'm not not going to comment on it.
John's asking about the Epstein coin. Do you know anything about that? I personally don't.
I don't know.
Yeah, crypto 420. We don't know why. It's like there's what I've done over the years, at least for what I do, is I try to keep things simple. I'm kind of a simple guy, and I don't try to focus on the fundamentals of why things are moving because in my mind those get distorted and those can get gamed in the press and the media, and you can form confirmation bias, and all kinds of bad things happen when you think you know what's going to happen in the future. And so what I've done with what I do is I just focus on the price. In fact, I try to avoid pretending that I'm going to know about anything what's going to happen in the future. I just make decisions based on what price is doing because price ultimately is the ultimate arbiter of value for things, and it reflects everything that's known about that at that given second. And so a lot of people are like, hey, when this news comes out, guess what's going to happen? This thing's going to take off. Well, guess what? The news is already reflected into the price of the asset. Everything going forward is already reflected in. And that's what I found is the only way that you can reliably trade things. So again, there you can ask me questions about why is this doing this and why. I don't know. I don't care. I just follow the price. And if it's something that I trade, I guess the second part of that is like there's only a few selected assets that I actually trade. I don't try to be jack of all trades because you end up being a master of none when you do that.
um, to Big Crypto Dave. Yeah, we're currently investigating and researching on Tezos. We'll probably be putting out a research report to our Omnia members within the next 2 weeks or so. It's definitely on our radar. Not going to comment on the.
Yeah, we're gonna avoid that one. Very very good.
Yeah. Let's see. Yeah, with packs and any sort of like gold backed stablecoin or anything like that. Interesting to have an asset backed stablecoin. Interesting. I think what I'm more keen on seeing at this point is stablecoins that are baskets of assets, or baskets of currencies. Being their that's sort of where we saw. What was the name of it? Yeah, that was like sort of the hot trend in the later half of 2019. And I think it makes sense because you're for things like Tether is based solely on USD. But if you have a basket of assets that are all paired, you have less risk of volatility even on something like a stable coin. So yeah, I don't know. But yeah, with something like gold being the asset backing, that makes sense. It's definitely well positioned. I think this decade especially.
I was asking about crowdfunding with blockchain technology.
I mean, I, I I love security tokens. I think that's definitely the future of crowdfunding in the space. It still is, I'd say, 2 to 3 years away from seeing it be, available to the retail investor in a crowdfunding sense. But I think we're quickly going to get to the point where we'll see, Reg CF offerings through blockchain technology. Where we see, fractionalized reserve. It's just like, sorry, like all over the place. Uh, yeah, it's definitely up and coming. It's definitely the ICO movement taught us that there's a lot of power when you go to the retail investor and say, "I have a dream, and I'd like to help me make this happen." Um, you know, Definitely needs the protections in place that a regulated offering would provide. So that's where I see the potential and the necessary requirements to have something like crowdfunding on blockchain, is to do it properly, do it with the investor protections in place. But once you can guarantee that, once you have the proper PPM in place and property, just like the proper equity distribution, proper cap table management, all that sort of stuff. Um, you know, we're definitely going to get there sooner rather than later. It just requires, especially with Reg CF, that's there's a lot of things in place, and you can only raise $1 million. So blockchain companies have to be okay with taking a lot less money, which for the last couple of years, I don't think that was the trend. So there has to be some of that, but we'll get there for sure. And yeah, there's been a couple of questions about DeFi. We've been talking about DeFi a little bit recently, just sort of the growth of the space. Um, yeah, like I said in the stream last week, I think definitely in the past year it's just been awesome to see the rise of things like synthetics and compound and maker and Uniswap. Yeah, as you pointed out, Kyber, lots of these just disparate pieces coming together to form this tapestry, this ecosystem that enables true decentralized finance, enables the uplifting of the bottom 2 billion people on this planet, to give them high quality modern financial services in a decentralized way. I don't think we have any conception of what that looks like right now, but we're building the infrastructure, we're making it happen, and that's exciting. That's really cool to see. Yeah, DeFi is still very much in infancy state. I'd be very cautious, in don't take out huge Bitcoin loans or things like that. You know, treat DeFi for what it is, decentralized finance. It's still very much the Wild West, in its execution, but its potential is staggering. It really represents like the nucleus of what fintech represents overall. So that's just really cool to see. So between security tokens and DeFi, it's something I talk about a lot on this channel. Um, those are two huge use cases of blockchain technology going out there to the world and saying, here, let's help you do this better. So, yeah, just cool stuff.
Any other questions? Anything that we've somehow skipped past, or anything else you guys wanted to bring up? Or we'll actually, this is going to be fun. Book number 2 is coming out next month, so
What's it about?
it is going to be fractal energy trading. So when I talk
Cool.
about these 4 rules, like rule number 1, which is the larger time frames dominate the trend. Rule number 2, reversal start from the inside out. So yeah, we got a course on it, but a lot of people like to inhale a book. A lot of people like book format. So this one's going to be my magnum opus,
Hmm.
and it's coming out next month. So I am going to put a gun to my head and get this thing done.
You heard that, everyone. He said he was going to get something done. So Let's hold to it.
It'll get published next month. Guess what, Mav? You get to proofread it.
All right. Well, cool, guys. I appreciate your time. Let's see. Yeah, I think we've talked about stuff like the stock market potential recession quite a few times in here, and yeah, we'll definitely watch. This year is going to be interesting. I think that's the easiest way to answer that question. But yeah, as always, guys, we appreciate your time. Lots of really cool things happening in the space. I think it is time to get excited about Bitcoin again. Definitely Q1, Q2, there's usually some volatility, usually some, we begin the year exciting, and then sometimes it peters off. Sometimes we have what happened last year where it just went completely crazy. So I would say buckle up. We've got some exciting months ahead. But as always, guys, we really appreciate your time being a part of this channel, trying to uplift the space, bring high quality cryptocurrency education and resources and just, information to this space because we love it so much and we want to see it grow. So you guys are helping us do that. As always, we just appreciate you being here. So long-winded, but appreciate your guys' time, and we'll see you next week. We'll take care.
See you, everybody.
Bye, guys.
Take care, buddy. Well.